The global cues this morning in US stocks, they scored a second day of solid gains on Thursday night, led by materials as well as energy stocks. Now, rumors about growth figures from China helped wash away some of the worries in a sign that US markets, or labor markets rather, the recovery there may be stalling. Government data showed new US claims for unemployment benefits. They rose unexpectedly last week to their highest level since late January. In fact, on closing bell, the Dow jumped a good 181 points. The S&P 500 index was up 19 and the Nasdaq as well climbed a good 39 points.
Let's look at Asian markets. Asian markets are firmly fixed in the green. Asian markets are picking up from where US markets left last night. Hong Kong on your screen up 300 points, followed by Japan up about 1.25%. What about safe havens? So if you check on safe havens, German bond prices, they are at a one-year low. Gold prices have stabilized and crude prices have corrected. So we are once again perhaps witnessing a flavor of risk on. Like I mentioned, this week we've seen both the despair and hope. Tuesday we saw flavor of risk off. Now we are witnessing flavor of risk on. Sun City portfolio, principal portfolio manager with Douglas Sealy and Associates joins us live from New York. Sarath, morning. Thank you for joining us. What do you make of market action and market activity for this week? This week, first we saw fear, and now we are experiencing excitement.
You know, I think what happened is since October, we've just been going straight up. So any bit of bad news, i.e. the employment report last week, people took some money off the table, and what you saw were fundamentals have not deteriorated. Things are still good. They're going to get better as we think over the year. And investors are coming back to the market. But along the way, there will be bumps, and the data is not always going to be positive. But the trend is definitely positive. Employment is improving, productivity is improving, and companies' earnings are going to be, what we think, better than what most people expect.
Sarath, hi, morning. What about data coming out from China? Because the first quarter GDP has now eased to a 3-year low. We're already seeing the entire Asian markets trim off their earlier gains.
I think the markets have discounted that China is going to grow high single digits. The question is whether that starts. The second derivative, that slows down even more. At this point, with China slowing down, that's actually helping pressure on commodities. It's helping pressure on oil. That for the global economy is better. But at some point, we expect China in the next 12 to 18 months to start improving, and that I think will take the global markets along with them.
Sarath, in the immediate near term, when I say near term, for this quarter, for next 3 months, are you advising your clients to buy safe haven assets, or are you advising your clients to buy high beta and risky assets?
So our view is actually, in the sectors we're looking at, we do favor the autos, the industrials, companies that have secular growth, revenue growth, and earnings growth. So in that context, I wouldn't say they're defensive. I'd say they're actually valued very cheaply, but they're more aggressive and definitely not defensive.